As climate-related data improve, we are also working to further enhance our macroeconomic models, scenario analysis and risk assessment. This helps us better account for climate risks and the implication for the transition to a carbon-neutral economy may have. As it is relevant to our primary mandate, we are also working to better take into account climate-related financial risk in the Eurosystem's balance sheet. In doing so, we are also following our secondary objective by supporting the green transition of the economy in line with the EU's climate neutrality objectives. In the implementation of our monetary policy, for instance, our tilting activities have helped decarbonize our corporate bond holdings, and we continue to tilt our reinvestments under the Pandemic Emergency Purchase Programme. You have a reference to that on the back of the one-pager. We recently concluded our one-year review of the tilting framework, and we expect the decarbonization of our corporate sector portfolios to continue throughout 23 and 24 on a path that supports the goal of the Paris Agreement. There are three main factors driving this decarbonization process. First, the effectiveness of our tilting approach. Second, redemption of bonds with a relatively high carbon impact. And third, we see that issuers of the bonds we hold are actively working to reduce their carbon footprint with benefits for society at large. Looking beyond 24, the Governing Council is committed to considering ways to ensure the further decarbonization of our corporate portfolio on a path that supports the Paris Agreement objectives without prejudice to our price stability objective. We will continue to review our climate actions to ensure that they remain fit for purpose, focusing on the areas where the risks are greatest and our work contributes the most. So as we enter in this new era of heightened geopolitical tensions and an unfolding climate crisis, we need to step up our efforts to make our economies more resilient. Progress on the green transition, including to accelerate Europe's energy independence, is essential, as it will reduce the likelihood of higher and more volatile energy prices. Deepening the capital market union, reaching an agreement on a sound fiscal framework, and addressing regulatory barriers are equally crucial to foster investment and speed up the development of renewables. The ECB will play its part, first and foremost, by ensuring that inflation returns to our 2% medium-term target. This is not yet the time for us to declare victory. We need to remain attentive to the different forces affecting inflation and firmly focused on our mandate of price stability.